Good afternoon, everybody. This is Thomas Wood. Once again, we're going to be talking about the live trading room trade of the day from the Value Charts live trading room. We had several very good trades. I'm only going to highlight about three of them that stood out to me as being the best trades of the day, but we also had some really good trades in cocoa, in sugar, in cotton, and a few good ones in gold as well, where we were scalping basically a $200 to $500 at a time per contract. So the three I'm going to talk about in the video today are corn, wheat, and the euro. Now first off, we will start with corn. We had a long in corn literally from right above the lows, just a couple ticks up off the lows. This would have given you the ability to take out around 12 cents per bushel, which is about $600 a contract. The reason we took this long, we had a bullish divergence on the 240-minute chart. You can see we came down lower low prices, and according to the MQ momentum, we had a higher low indicator line and a higher low histogram, which gives us the okay to go ahead and get long. If you look closely, you can see that at the bottom of that bar, we were also significantly undervalued. That's the lower red portion of this bar. You can't really see it very well, but it's there. You'll have to take my word for it. And even if you were just doing a value range trade, again, you had the ability to take out around 12 cents in corn. Another thing that we were looking at when we were looking to get long is we pulled up the MQ market strength indicator, which is what you can see down at the bottom of this chart. Now what this does is it helps us identify how large the average sell-off is and how large the average rally is. And you can see, based off the historical moves, we were getting very close to how high the average sell-off is, which is what this red line is. You can see I have a dotted line going across showing basically the average. We were right up at that, so we knew that based off a historical price movement, we had a better chance of the market turning around and rallying up from where we were. We ended up getting long here, ended up being a great trade. Like I said, you had the ability to take out around 12 cents, which is roughly $600 a contract to the upside. The next one I'll point out is the euro. Now we are coming off of, and we are in the trading room trading candlestick reversals quite often because we just had the reversal course last week. We had a lot of attendees there that really enjoyed it. But what we had was the euro on an hourly chart. We had, first off, a bearish divergence according to MQ momentum histogram. So we said, okay, we have a lower high on the histogram, but a higher high on prices. So we're losing strength to the upside. And then we had what we call a yellow hat doji, which is this price bar right here. So what you do is as soon as that bar closes, you get short on the open of the next bar. And we did that. That ended up giving you the ability to take out around $700 a contract to the downside, where we noticed we had a support level right at around 1.3431. Now we were getting short from the open of this bar, which was 1.3491. So if you do the math, that's 60 ticks or 60 pips to the downside, which again, right around $700 a contract. We also talked about getting long here off of the support. So if you took the long off of support, then you had the ability to take out another $200 or so per contract out to the upside. And then if you're still in it, you'd be having to break even, stop in place now. But again, that was a really good trade. And that was one of the value candlestick reversals that we were talking about in the workshop last week. Now the last trade, and my favorite trade of the day, is wheat. This was off of a 120-minute basis. This is really just a textbook bullish divergence. The reason we took the trade, as you can see, we had lower prices, significantly undervalued, which is what that lower red bar segment indicates. We also had a much higher low on the MQ momentum indicator and a much higher low on the histogram for momentum. Gives us the okay to go ahead and get long, risking the low of the previous bar. Stops never got hit. Wheat rallied up. You had the ability to take out around 14 cents, which is about $700 per contract. Very nice move, very good trade. We'll continue to follow these markets. Hopefully we'll continue to do well. As you all know, we're now in our 13th week with only having 4 down days, doing very well. We will continue to trade these, as I said, and follow these markets. We have a few open positions right now. Look forward to seeing everyone tomorrow morning in the trading room, and we will go on from there. So until next time, happy trading.